Hello, this is Aaron Wissner with Local Future, and I'm here on the line with Nicole Foss. Nicole is in New Zealand. Nicole, how are you doing today?
I am doing well, thank you. It's nice and early in the morning with a new day.
Nicole, can you tell the viewers, like, what is your background? What is your interest in all of this stuff going on?
How long do you have?
A short, like short. A couple sentences.
Well, so I run a website at the moment called Applied Systems Thinking, which is at fossblog.com. I haven't written a great deal for a while, but that's where all my work is collected. So my background is really interdisciplinary. It's biology, it's law, it's energy, it's finance, environmental consultancy, a whole range of different things. And so what I do now is pull it all together. So of all the different fields that I've been working in, I pick out the important points to draw everything together into the biggest possible big picture. And that's what I've been trying to do for probably 35 years, something like that, getting on for 40 even.
Are you trying to be
yeah,
like a polymath or something, Nicole?
I think I ended up being one. I wasn't trying to, but that seems to be what happened.
Well,
I'm just too interested in everything to settle on just one thing. And so to me, the interesting thing is always how everything fits together. I mean, there's absolutely a role for both kinds of people who go deep down the rabbit hole in one area and really tease apart all the details. And then there are people who just look at what those people have done in a whole range of different fields and draw it all together. And you absolutely need both, because if you only had people who have my way of looking at things, there would never be the depth to really be able to do it properly, because the depth would not have been explored. Whereas if you only have people who go for depth and you have no breadth, you don't have any way to connect things, and you lose so much explanatory power if you don't look at how things fit together. So this is the side of things I've chosen to be on, which makes me in some ways jack of all trades.
so
And
this
some
is
people might
this
say
is kind
master
of
of none. But
this is kind of an opportunity then for, I mean, this time in history for people to, even though they're specialized in these certain, they have these certain skills, to see how much they can open
oh yes,
up, because
yeah.
that's where they're going to start seeing stuff they never saw before.
Absolutely. I mean, for instance, when I was at the oil drum, and there were mostly people who were engineers and geologists, and they were brilliant. The knowledge they brought to that website was absolutely unparalleled. But at the same time, there were things that some of them didn't see because they were looking at their field and not more broadly than that. So I've been called in my life a peak oiler who doesn't understand peak oil, because I said, oil prices are going to fall off a cliff. And people said, well, you couldn't understand peak oil, because if you did, then you would know that they would only ever go up. And you have to understand the fundamentals of oil, but you also have to understand finance and herding behavior in order to be able to see how those things fit together. Because if you don't have all the factors that are essential for seeing what's going to happen, then you always end up being wrong. A whole lot of people went long oil in in the last crisis, and
Me,
probably a lot of them lost their shirts.
I did, and I didn't know I was so. I thought for sure, because I mean, oil is this most valuable thing. Like, it has all this energy, it has these molecules that are amazing, and so it's got to be worth more and more and more and more. But that's not the basis on which value is calculated in this sort of an economy.
Prices do not reflect the fundamentals. People think that they do. There's this people believe in the efficient market hypothesis, and that the market automatically correctly prices everything all the time. Bull. No way. That is not what markets do. I mean, most people haven't got a clue about the fundamentals when they're investing in things. Not the insiders, but most people who are investing are chasing momentum. They don't understand the fundamentals. They just see something going up and they think, this is going up. Somebody must know what they're talking about. I'm going to buy some too. I don't want to miss out. Fear of missing out is huge. Market sentiment is huge.
So this is all
So
just speculation, just
yes,
trusting somebody else, or just trusting the market
yes.
that, hey, it's going up, it's going to keep going up. Hey, it's going to go down, it's going to keep going down. Hey, it's volatile, it's going to get more volatile. Or hey, it's, whatever. Because you can bet on any of these things, right? You can do like the little V-shaped bets and W-shaped
Yeah,
bets and the upside down
you can.
W's and all these bets.
Yeah, and there are people who understand the fundamentals and bet on that, and they don't necessarily win because the fundamentals don't set prices. And there are a whole lot of other people who are just looking for momentum, looking for something that's going up to try and make a capital gain. And so the market dynamics are hugely grounded in sentiment and human herding behavior on the way up and on the way down. And what you tend to get when supply and demand get tight, you don't get a one-way moonshot. You get huge volatility because people are afraid. And the people who are making the actual bets, who aren't just so afraid they're sitting back and doing nothing, but the people who are actually involved in the market, they don't know whether things are going to go up. Then they do, should I buy the dip? Should I not try and catch a falling knife? These are all the sort of ways that people think. But because you have some people who take one decision, some take another, you get these huge swings. So in the 30s, you had not only the biggest falls in market history, you had the biggest rises as well. So the VIX, for instance, the volatility index, is the fear index. When fear is in control because there's a perception that supply and demand are tight, then you get this huge volatility.
But now we have the opposite, right? It's not supply and demand are tight. Like with oil went down. It was $40, negative $40 per barrel per contract. And who expected that to be coming? I mean, who won out on that deal? I mean, I don't know that any of the traders could have possibly, I mean, maybe they did, but wow. I mean,
the one I can think of is Mike Maloney, who invested in oil tanker capacity because he saw the squeeze coming and he thought people are going to need to rent oil tankers to store this stuff. So yes, some people were perceptive enough, but you often have to be indirect about it. But when I was talking about supply and demand being tight, I was really talking about the last financial crisis when people were all going long oil and thinking it could only ever go up. And that was when there was the perception that supply and demand were tight. And the interesting thing, it's not actually the reality that matters. It's only the perception. It doesn't matter if it's true. It only matters if people believe it. And commodities top on fear of shortages. So on the way up, you go way above what the fundamentals would justify at that particular time, because people are speculating, thinking it can only ever go up, so I'll get in on it now, and up and up and up it goes in a speculative loop. And then it overshoots to the upside, and then you get speculators shorting it, saying, oh, it must be overvalued now, and you'll short it. Then when you move into a depression, you start to get a demand collapse, and that's when you get the undershoot. But in this case, because of what the virus has done, the virus has dropped demand so much faster than anything else would have done, that it's playing out really quickly. So my long-standing forecast for where oil might go to in a depression was about $20 a barrel. And I got really laughed at for that. But I had never thought it would go down to minus 40. And I still don't think it would have done without things happening this quickly, because the dynamic for that was a storage squeeze. And that's what happens when everything happens really, really quickly. There's just no time to adapt. So you get all kinds of crunches. And that's what ended up happening with this. So there was a desperate attempt to get rid of the oil contract, because if you didn't get rid of it, you were going to have to take physical delivery. And if you don't have any storage place, that's a huge issue. So people started desperately saying, I'll pay you to take it off my hands because I don't have anywhere to put it.
Hey, Nicole, if you had, let's just say hypothetically, you had been given $1,000 Canadian or US or New Zealand, whatever, and you had to put that in something that was not a household, like hard goods. You had to put it in something. I'm sure people are like wondering, what would Nicole do? What would she do with this $1,000? I mean, what would she speculate on? Speculate. What would she say? Oh, that's a sure bet. I should definitely do that.
I actually wouldn't speculate on anything.
Why not?
I would hang on to it.
There must be something.
Well, I honestly don't think I would, because what you really need in a depression, which is absolutely what we're moving into, you need the actual cash. Because the thing is, we haven't seen the kind of shortages that are going to come through yet. They're going to be huge, and they're not necessarily predictable. Farmers are destroying food. We're not hungry yet, but what happens the next season? There are going to be a whole lot of things, supply chains that are destroyed, for instance. So we don't know what we're not going to have, and we don't know what we're desperately going to need. So what I would do is hang on to it and say, I will make a decision down the line when I have more information as to what will be really important. Because if I make all my decisions up front, then I have sort of lost all my ammunition, if you like. I won't be able to take advantage of opportunities that come down the line later on. And I wouldn't be able to avoid downsides that take money to avoid either. So I would just hang on to my little handful of choices and wait until I knew more. But there's nothing I would speculate on.
But what about if I bought some gold? I mean, gold would be good, and I could go to the city, and I could go to the coin dealer, and I could buy some gold, or maybe I've got a buddy and I could buy some gold, and even if it's $3,000 an ounce US or whatever, 2,000, at least I have my little gold coin. Wouldn't that be a good idea, Nicole?
Well, it totally depends on your circumstances. And in the framing that you put, I would say no, because that framing suggests that you're an ordinary person with an ordinary kind of life who just wants a little tiny bit of security somehow. But most people who are ordinary people living an ordinary life would have a mortgage, and they might not have a lot of cash. They might live paycheck to paycheck and things. So they have much bigger problems to deal with before they ever start thinking about gold. So you have to get out of debt, because debt will kill you in a deflation. You need to have a certain amount of cash on hand, because cash is your ability to make choices later on. You don't want to give up that ability if you can possibly manage not to. So I have a list that I would go through as to things, the order of things to do. And so get out of debt is number one, hold cash is number two, and then maintain or gain some control over the essentials of your own existence, and maybe start a business so that you're tied in with your neighbors and you're providing some kind of essential service, local supply chains, local distribution network. If you've already done all of that, and you have money burning a hole in your pocket, by all means buy gold. I mean, all the big investors are talking about gold. I mean, Mike Maloney, for instance, he's a brilliant guy, but his forecasts are for people who have enormous amounts of money. So what you do if you have enormous amounts of money are very different from what you do if you are an ordinary person. And that's the thing I find frustrating, that if you really watch all the financial advice, the things that people are talking about, for the most part, it's not addressed to people who just live an ordinary life. So if you follow that advice, you can get into real trouble. Now, having said that, the one thing that might be worth buying, if you've done everything like that, I don't think I would buy gold. I think at the bottom of the list, I would buy silver. Not because silver will necessarily hold its value as well as gold over the long term, but because you might be able to use it directly without having to go through cash first. If you have gold, you're probably going to have to sell it, get cash, and then use the cash for whatever you want. Because
well, and I have to say, just for a moment, I think those of us who are the proletariat should refuse to accept gold in exchange for anything. Like, really, I mean, we should say, nope, I'm so sorry, Mr. Richie Rich, Mrs. Richie Rich. I can't eat that, and I'm not giving you my food. I'm not giving you my labor.
Oh, absolutely.
You got to give me something real, like food, medicine. That's what I want. I don't want your little chunks of golden metal. That's nothing.
That's why it's at the very bottom of the list for ordinary people, because exactly all the other things are more important. Clean water, food, energy, a bicycle or something, like all these basic things that make life possible and more comfortable than it otherwise would be. Those are all so much more important for ordinary people than owning gold. So gold is sort of what you do, or precious metals in general are what you do if you still have money left over after you've already done everything else, which already means that you're not talking to a whole lot of people at that point. But there can be, for people who genuinely can spare a little bit more, maybe they're older and they've paid off their house a long time ago, they don't have any debt, maybe they live on a farm. There are people who would have a little bit of extra and who could put it into silver, because silver is undervalued relative to gold at the moment. So there is an argument for that. But personally, I think especially if you live in a rural area, there's absolutely no point, because you won't be able to get to anywhere to trade the stuff. So if you live in town, there are going to be currency markets, markets for selling gold and silver. They might end up being black markets if precious metals are outlawed for private ownership, which they were in the Depression. And
I think they should be. Just like last time, I think they should be. Because I don't want the billionaires and the billionaires and millionaires know who they are. I don't want them coming to anybody, my neighbors or anybody, with this piece of gold and saying, oh, this is money now.
Yeah. And people in the country, so if you don't have a weighing scale, one of these scales that tells you exactly what an ounce of something should weigh, you're not going to know if it's real or if it might be gold-plated tungsten. Someone could be having you on. I mean, people aren't going to trust that. So there's not just the fact that they can't eat it. They're not even necessarily going to trust that it's real in the first place or would have any kind of value. So I think unless you are a reasonably wealthy person living in a reasonably urbanized area where you have some means to trade these, I don't think it makes much sense. And even if you do, it's going to be risky. So if you have this stuff and you end up getting hungry, which a lot of people who have gold but still have debt and no cash are going to find, they're going to end up selling it at distressed prices for next to nothing. So it's not even going to be worth very much to them. And that's a real problem. If you have to sell into a market at distressed prices, you will not get anything like what you have is worth. It's only a store of value if you can hold it over 20, 30 years, not have to rely on the value it represents in the meantime, because then it will hold value. It has done for thousands of years. So it's not that it's not going to have any value. It will to somebody always. But if you have to sell it in the meantime at distressed prices, you won't get the value that it's worth. So it's really only worth it if you're going to have it as an investment. But it's risky. If you're going to go out and try and trade a gold coin for some cash to buy food in a black market, someone might say, oh, this person appeared to have some gold. We'll just follow him home and see where that came from, see if there's any more. So you make yourself a target. If you own something that's too valuable that everyone is going to want, then you've painted a big target on your forehead if you ever admit you have it. And so if using it is to admit that you have it, then what on earth is the point? If you're just taking a store of value and basically burying it in the ground for 30 years, then I'm sure there are better things you could have done with that value in the meantime.
If you are seeing this on YouTube, if we do decide to post it, then please hit the like and the bell and the subscribe and leave a comment and the comments and questions, because who knows, maybe we will put this online. Maybe people will have questions. Maybe we'll Nicole and I will chat again.
I'm happy to do Q&A and stuff like that. I have no problem with that. In fact, if you want to tell people that they can submit questions and then we can do a session where we answer people's questions, I'm happy to do that.
Yeah, that would be fun.
Interactive stuff is great because it draws more people in.
All right.
I think that would be useful.
I'm going to sleep on it.
Okay.
All right. Thank you so much, Nicole.
Oh, you're welcome.
Take care.
Bye.